Well, good evening, ladies and gentlemen, and we're a couple of minutes late today. We had a lot of people coming in quite late, but we're here now, and I welcome you to this Danielcode webinar. It's good evening to our friends in the States and in Canada, and it's good afternoon to our friends across the ditch in the Shaky Isles. That's New Zealand, and here we are. Anthony's with us. Hello, mate. Good. Anthony DD used to be a broker, now a trader, private trader. Good to have you with us, and that's terrific. Akshay's with us, so that's grand. And how's the volume, folks? Can you all hear me all right? Somebody just type in the question box if you would, please. Let's see who else is here while we're... See, 10 by 10, Anthony D, you're smart on the job. I'm going to have a really, really interesting and I hope challenging webinar for you guys today. So just let me catch up on all the wonderful people who are here. And we've got Steve, Sean, he's down in Adelaide. Robert, good to have you with us. Todd's with us. Steve's with us. Let's see who else we've got here. Lots of people. Partho's with us. He's doing a tutorial. I hope you're feeling better, Partho. You've been ill for a while, I know. Mark L is with us. I'm going to be talking about Mark today, and I've been threatening to have Mark on the program for about the last month or so, but I hope I'm going to do a special webinar next week, and I hope to be able to interview Mark L for that. Mark's our original super trader, and there's a really interesting backstory to Mark, which you'll enjoy. Leo's with us. Good to have you with us, Leo. And Joe's with us, James. Harold up in Redding, California. Very special person, Harold. I did a tutorial up there many years ago, and Harold was the most gracious host and a wonderful chap. And Harold, of course, is a very, very keen man on gold. And I'm going to be talking to you a lot about gold today. So welcome, Harold. Gregory's with us. Graham's with us. Steve's with us. George, haven't seen you for a while. Donald, he's new. Good to have you with us, mate. Ben, he's another new one. Grand to have you with us. Anthony DD, you are going to enjoy this, Anthony. This is going to solve all your problems, mate. Andre's with us. Akshay's with us. Akshay, good to have you with us, my friend. And plenty of Steve's and Michael's. Here we are, and Peter's. Grand to have all of you with us, folks. Okay, so today's webinar is entitled, For You, the Gift is Gold. And I'm using that in two senses. First of all, the market for gold, which is a blessing to us traders, and also the gift of the Danielcode. I'm going to show you today why this is such an important product, and how, as Mark L says, it changed my life. And you'll hopefully have a chance to talk to Mark next week if he's available. I'll send you an email about that, Mark. Okay, so let's move on. As you know, folks, markets are rational, orderly, and sometimes predictable. And the Danielcode is a set of proprietary ratios that control time and price in all markets. And the business of trading futures and forex is not to be right, although that's an incidental benefit, but the business is making money, and that's why we talk about making money. That's how we measure our performance. So to many of you, markets are frightening things, and they shouldn't be. Once you know how to trade, markets are your friend. They exist to give you health, wealth, and happiness, provided you're trained. And everyone, of course, falls into one of two categories. So to some degree or the other, you are either trained or untrained. This was an expression I started using many years ago when my children were at school and they would get anxious about exams. And I would say to them, it's pretty simple. You're either trained or untrained. If you're trained, exams are an opportunity to show off to your teachers how well you've done your work and how much you know. If you're untrained, nothing's going to help you. And trading is exactly the same. If you're trained, and you understand how markets move, and you understand Danielcode, then markets are there. They're your friend. They are your benefactor. If you're untrained, you're going to struggle. And I feel particularly empathy about this issue because I got very excited about futures markets many years ago. I had been trading stocks for a long time. My father, who passed away a long time ago, my dad was a great man for the stocks, and he loved investing in stocks, a little bit of trading. So I did that with him. And after he passed on, somebody introduced me to futures. In fact, it was Annie D. You've heard me talk to Mick D on this session. He's one of our super members. And Annie's his sister. And she actually introduced me to futures trading. And I was hooked. I got really obsessive about it. And being an attorney, I thought you could learn anything the way you learn the law. You have some lectures, you have some authoritative textbooks, you have some practical experience, and it all comes together. Well, trading futures and forex, that's not true. And I spent a number of years going to the States mainly, but also Europe, also UK, doing courses from all the big names you can think of. And they worked pretty well on the example, never bet against the example, but they just didn't work well enough to give you that continuous uptrending equity curve, which is what I wanted. And I know the turmoil, the travails that I went through when I had spent this huge investment of time and a not insignificant investment of money. And it wasn't working for me. So I know that a lot of you are in that position, and I assure you Danielcode will change everything for you. So today we're going to talk about gold mainly, and it's always been a treasured source of wealth, status, and security. And it's got all these wonderful qualities in there that make it such an amazing metal, and it is amazing. And it's catches everywhere. More people want to trade gold than any other market. And from a trading point of view, gold has several advantages that other markets don't offer. Now, today I'm talking about gold futures, Comex Gold futures. And they're a wonderful market. And the you can perhaps see the last item here that Peter Schiff, who's famous, he's the boss of Schiff Gold and a notable gold commentator. I wrote an article some years ago saying that what a wonderful market Comex Gold was for trading because it had these additional features that we don't see with such clarity in other markets. And as soon as that was published, I got a letter from Peter saying, you're an idiot. And didn't I know that the Comex Gold market was a sham, and he had proved conclusively that it was manipulated. Well, that didn't have a big effect on me, actually, because I'd always assumed that markets were manipulated. Many years ago, Rene Rivkin, any of you in Australia will know that name. He was a gig. Welcome to have you with us, mate. Gregory, of course. Thank Greg Palladini's with us. A few of you coming in late. A few of you will know that name in Australia. And Rene Rivkin was a very, very flamboyant stockbroker. I'm going to say back in the 80s. And he had a gold Rolls Royce and solid gold worry beads. And he was a real character. He was always in the media and newspapers back in those days. He made a famous comment once that why was anyone worried about insider trading? For those of you who don't know, insider trading is when you have knowledge of something in the market that hasn't been released publicly, and you've gained that knowledge because of your position as an insider in the firm or linked to or have knowledge of someone who gave you some inside information. And Rene's great statement was, Go up to the cemetery at North Head. It's a huge, huge cemetery. And he said, well, the one at South Head's fabulous. That's the really big one. Anyway, go up to the cemetery out at the Sydney Harbour Heads, and I'll tell you, there's no inside trading. And he said there's no movement either, nothing happens. And Renee's theory was that markets move because of insider trading, and that's true to a substantial degree, depending quite on how you define insider trading. There's lots of manipulative trading that goes on by people who are not insiders, as well as the illegal trading. But Peter Schiff writing to tell me I was an idiot didn't deter me at all. I mean, I'd always assumed that markets were manipulated. Buyers get an idea. What about the wonderful, wonderful case of what's happened to, I think, was it tin or was it nickel? I think it was probably nickel. There was a Chinese gentleman who owned a whole lot of nickel refineries. This isn't so long ago, and he pulled off a deal to buy a huge number of additional refineries in Indonesia. And he was so convinced that with the new production and some new management he was going to bring to these new acquisitions, the supply of nickel was going to just ramp up. And he was so convinced of that he started shorting it on the London LME, the London Metal Exchange. And he kept shorting it, and he kept shorting it, but it's impossible to believe, but it's true. With all the advisors that he had as brokers and others, he didn't put on any stop-loss orders. And then eventually Goldman Sachs and then JP Morgan found out that he was short a bunch of contracts, so they started running up the market against him, and it went up. It normally sits about nickel. Yeah, thank you, Anthony. Anthony, normal price was around $24 to $28, and they started to push it up. It went to $30 to $40 to $50 to $60. This went on, and the losses from this Chinese gentleman were massive, huge, and then eventually it came to a climax. They got it up to $80 or $85, and I think the very next day it broke $100. It might have even broken $110. And the notional loss of this guy were in the many, many billions, and he still hadn't put on a stop-loss order. Completely and utterly hopeless. But I mean, it happens. It happened. We saw it happen in grains 2 years ago. We saw it happen, well, back in the famous days of Bunker Hunt and his brother. And eventually he was wiped out. So it got to the stage that the brokers who were the members of the LME exchange, they couldn't settle, they couldn't pay. And the LME had recently, at that stage, been acquired by some Chinese corporate interests. And they were under a whole lot of pressure not to be harsh on this gentleman who was short a huge position and wiped out. And what the exchange did, which was completely unheard of, they March the 7th, 2022. Thank you, Anthony. You're an absolute source of knowledge, my friend. And they actually suspended trading, and they said, we're going to cancel all the trades that went through the last 2 days. Well, Goldman Sachs and JP Morgan, who were a mile in front, big serious money we're talking about, they got a lawsuit going. I don't know if it reached settlement or been paid or what have you. And anyway, long story short, that's what happened in the futures market. And this is always held up as another one of those examples that the futures market is dangerous and what have you. It's not. What's dangerous is people who don't know how to trade. That's what's dangerous. In my opinion, I don't trade stocks for the simple reason that I think they're too risky. And I've been the chairman of several public companies, and I know how these accounts are prepared, and they are not always as you would think they were. But anyway, continue being back to the story is that Peter Schiff, of course, is a bullion dealer. and a number of the gold bulls out there, the perma bulls, are bullion dealers, and to them, taking a contract in the Comex futures is a lost opportunity for them. They don't want you doing that. They want to sell you physical gold. That's their business. So bear that in mind. There's a whole lot of that goes on. I guess a summary would be to say simply that everyone's talking their trade pretty much all the time. So let's start at this. I'm going to show you next a Danielcode long-term chart. This is our 24-day chart. We have 6-day, 12-day, and 24-day charts. The reason we use 6 is that the vibration for all markets is 6. The great W.D. Gann used to say, if you are worthy, I will tell you the number, and if you had become worthy, presumably by spending enough money on his various courses, he would tell you that the number was 7, which is not, it's wrong. And that's one of the reasons why all you Gann fans out there have so much trouble getting it all together. I mean, there are other reasons as well, but we're not talking about Gann today. What we're talking about is 6-day charts, and this is the 12-day charts, and this is our 24-day chart. And the basic cycle for gold is 44. And if you'd like to know why that is, you can read this article of mine. The link is down below in Financial Sense, and it tells you how to find that basic vibration of gold, which is 44. It also vibrates on the other more normal vibrations, but 44 is a very special one for it. Now, I've got a challenge for you folks today. As we go through this webinar, I'd like you to admit or think about admitting that almost all of you are brainwashed. If you haven't done a Danielcode tutorial, I'm pretty comfortable saying you're brainwashed. Commonly accepted law on markets is that a 10 to 12% annual return is pretty good, if not fantastic. Beating the index is considered an outstanding result. You have been told, I'm sure, beware of overtrading. Trade occasionally, say 2 or 3 times a month. 25% annual return on capital is an unrealistic expectation. And generally, the trading methods of hedge funds and wealth managers is held up as the correct way to trade. The answer to the challenge comes later, but I can tell you none of those propositions are true. They're accepted as true. They're coveted by the media. They're closeted by the media, who themselves don't know how to trade. And of course, the media won't sell any newspapers saying John Needham says this or John Needham says that. But they will send lots of newspapers by quoting a big name. So what's this? This is from Mr. Greg Palladini, who's a wonderful friend of Danielcode. For those of you who don't know, please go click on the forum link forum at the Danielcode website, www.thedanielcode.com. And Greg Palladini, who's a super trader and a wealth manager in California, has done 2 Danielcode tutorials, and the last time he came back purely to learn about trading time, because I wasn't teaching the creation and trading time signals at his first webinar. Under forum, when he did his second tutorial some years ago now, he posted everything that he came across, everything he thought about. How did he find the tutorial? What did he find good? What did he find bad? It's wonderful, so generous to allow all of this to be posted on forum. And he's got a post here saying, Schiff and all the gold dealers who say the USD is a fiat currency and will become worthless, then why would they want to tell you their gold for US fiat dollars? Well, yeah, exactly. It's a bit of a scam, and it's a pretty well-known scam. But it goes on and on. People are simple, and things that are simple have attraction for them. Okay, so there's the challenge, folks, and the answer comes later, so don't leave early. Okay, here is a chart of the long-term time cycles in gold. And what's pretty interesting is that there are, 1, 2, 3 different cycles on this chart, and you can see this last run up we've just had from that low. There were 3 separate time cycles expiring on that bar. Now remember, this is a 24-day chart, which means every single bar here is made up of 24 trading days. So it really is a long-term chart, but you need these long-term charts to enable you to see long periods of data and vast periods of data. Time cycles are slow, but they're deadly, and you can see no surprise there. We had a time cycle up near the high at August 2020, and that was the high. And then we've had all the time cycles since then. But this one was a very prominent time cycle at the low here because there were 3 different cycles expiring at this bar. And that's a pretty powerful thing. Okay, so here we are. This is next I'm going to show you our 12-day chart where we had at least 2 sell cycles expiring on the bar in July, and an additional buy cycle on the bar ending October, and this sets up the probabilities of a sell-off into the October bar low here before the rally. And then we move to the 6-day charts, and these are new, folks. These are created for clients on the weekends and on Wednesday evening. We can see the chart below, published October the 5th. Note the final bar plunging through the black line at 1847. And heading for the next Danielcode target. DC means dark Danielcode. So this is the first one. This is what we call our Super 6 charts. Some of you guys are getting them. Greg Palladini's one. Gig is saying no chart, no chart. Have you got it now, Gig? It's changed. You should have it. Okay, you've got it now. This is one of our Super 6 charts, and as I say, some of you are getting them. Greg Palladini and the other Greg are getting them, as is Rod and some other guys. If you're interested in receiving these charts, folks, which I think are absolute dynamite, every bar on these charts is a 6 days, 6 trading days. And as I show this to you, this is gold, but I'm doing them in gold, S&P, crude oil, and UST bonds. And if you'd like to receive them, you need to be subscribed to the Danielcode Super Package. Go to the link on the website, if you would, and look under, I don't know what they call it these days. Let me see. Here we are. I should know this stuff off by heart, shouldn't I? I mean, it's my website. Here we are. It's called we are services. Click on the link that says services, and you'll see them all set out down there. And if you want to receive this these charts, you need to be subscribed to the DC website Super, which gives you everything on the website. It gives you the 4th seal, 6S charts, TO3, TO3 plus, everything you can think of, forum, etc. And you should be on that if you possibly can. And if you would like to receive these 6-day charts, send me an email. Tell me you've subscribed to the Danielcode website Super Package, and send me your username, and I will add you to the mailing list. At the moment, that I'm sending them out by email on Wednesday evening and on the weekends. And Terry is down traveling in the States at the moment, but when he gets back, he's going to incorporate them into the website. But at the moment, I will just send you by email twice a week, more often if required. Have a good look at this. So here's this market gold just plunging straight through the black line at 1841.1, and the black line's very propitious. It has all sorts of other characteristics, but look at this. It goes down and it hits the next blue line with a enormously high degree of accuracy, as these things do. In fact, I can tell you that low was before the key reversal bar, outside bar. That low was 1826.2 against 1824.7. Have a look at that, folks. And this is a 6-day chart. They've got 6 trading days in every bar. It's amazing, isn't it? So there you can see that you've got a little small key reversal bar setting up right at the Danielcode number. This is what happened at the next chart. This is the 12th of October. It's roaring. It's heading north, and it keeps going. This is the 19th of October. Very big deal. And you can see there it's charging up, and it's run into resistance at the Danielcode, retracement of 1975.5. So here's the 21st of October. When did I get out of sync there? Shouldn't have. 21st of October. And you can see it hovering around that blue line at 2006. And the market needs to close above that if it's going to go higher. The Danielcode black lines act as support and resistance like all the other Danielcode numbers, but it has this additional quality that if you get a close above the black line, the odds switch massively to the fact that the swing that it's marking will be taken out. That doesn't mean much on a daily chart, but you remember, some of you many years ago now, I guess, when gold broke out and was making its all-time high, at one of these webinars, I showed you a 6-day chart and said, if we get a daily close above that black line, probabilities are that the swing high is going to be taken out. And it was, and that was about $23,000 per one contract. So pretty fantastic stuff. And markets know and respect these numbers. And there's a whole story about the Danielcode. And Akshay's with us, incidentally, and I'm pretty sure it was you, Akshay, going back many years just to the start of Danielcode, when I first released the website to the public back in late 2007. No one had ever heard of the black line, and I wrote a few articles showing how powerful it was and how famous it was. And it wasn't so long after that, and I think it was Akshay, it might have been someone else, they sent me a email to say they were using the Bloomberg terminal, which is the most common for pro traders, and the Bloomberg guy had come around to visit them, the salesman, and said, "Oh, we've got a wonderful new indicator. Multiply this by that and that. They're all Fibonacci numbers. Take away your mother's age, and you'll have a number very, very close to 89%, which of course is the Danielcode black line." So they copied me, as they do. But it's powerful, the black line, and markets know and respect it. I'll show you a little bit more of that later as we go on. Here is our next chart. This is also part of the Super 6 series, 6-day charts. And look again, it breaks through the black line and it runs away. It was stopped at the red line at 2017, but look where the close is. That's the tell. It's run away from the black line. And of course, this is what you've had now from Wednesday night's chart. Little key reversal bar there, an inside bar at this stage. Doesn't look like a whole lot's happening, but you can really see how powerful that resistance was. Was that worth knowing? Everything is worth knowing. If you know something that the vast majority of traders don't know, you have a huge advantage. And Danielcode Super 6 charts are one of those things. So if you'd like to have these charts, folks, gold, S&P, crude oil, and US T-bonds, get yourself subscribed to the DC website Super. Send me an email with your username, jneedham@thedanielcode.com, and I will add you to the list, and the next ones will be out on the weekend. Okay, so did you like that, folks? Did you enjoy that? So if you like that stuff, I can teach you how to do it. And here is the link to the Danielcode trading tutorial, where everything is revealed there. Here we are. This is from Akshay, my friend, long-time Danielcode supporter. Hi, John. Yes, the DC black line's amazing indeed. See US dollar, Indian rupee chart. It loves that. And as I can recall, there has been 5 instances in the last month or so where the DC black line has turned this market down in an otherwise flat trading range. Thank you, Akshay. It's certainly worth knowing, folks, isn't it? Yeah. Anyway, Danielcode trading tutorial where you learn everything that I'm showing you and have shown you in these webinars, and there's the link there. Okay, let's move on. This is the extras that make trading gold so special, and there's a number of them. The first one is the famous Danielcode black line. We've talked about that. And markets are very careful at that black line. If they're not going to keep going in the way they are, they'll be refused or returned by that black line. This happens to be soybeans as an example. And you can see how much that market respected the Danielcode ratios, because we can see that here we are, this high today was 1330 correct zero. There's little arrowheads you see in grains and T-bonds. That's called a correct, that little arrowhead. And that black line's at 1330 correct zero. The high was 1330 correct zero. Exactly no variance, zero variance, and then it pulled back a few points before the close. So doesn't mean it's not going to have another attempt at breaking it through, but they're a very, very special form of resistance. And gold loves them. Gold is very, very much governed by that. Okay, so here are the extra things you get with gold. The first thing is it's directly correlated with silver, and sometimes the signals will appear in the other market. And gold and silver are so highly correlated that a trade in one can be traded in any other. In other words, you can get a signal in silver, but you can execute it in gold, or vice versa. And also the same with Huey, dollar Huey. Huey is an index of the unhedged, major unhedged gold producers, gold miners, and those signals too are very telling. They are so highly correlated. You can't trade them with futures. There's no futures contract for the Huey. There are options, however, but I use them mainly as a creator of signals that are not apparent in the primary market. In other words, you can get a signal from Huey that is not apparent in the gold or silver market, and you can trade either of those markets based on that Huey signal. Very important, that direct correlation. And now, move on. This is the gold and the US dollar index, and gold is usually inversely correlated with the US dollar index, as you can see. Dollar index goes down, gold goes up. Dollar index goes up, gold goes down, inversely correlated. Now, occasionally, that's the usual position, but occasionally, or perhaps a better word is sometimes, they break away, gold breaks away from that inverse correlation. And I wrote an article about this many years ago, and I went back a long time, maybe 15, 20 years. I can't quite remember the exact detail, but whenever this inverse correlation has broken, it's always been in favor of gold. In other words, when it loses its inverse correlation, gold gets stronger. It's always to the upside, and it's always gold. Now, always is an unknown word in trading, because everything in trading is based on probabilities. So words like always and never should always have an asterisk next to them, qualifying that is at the position as we've seen it. It will probably change one day. But thing to think about, remember the next time this happens, when the correlation, the inverse correlation with the US dollar index, when that breaks, it has the vast majority of times, I've said always, excuse me, always with a asterisk, been in favor of gold. Gold has benefited from the breaking of that inverse correlation. One of the things about gold, you can see now we have so many other signals that are telling us the probabilities of gold's movement. We've got a dollar US, we've got a black line, a Danielcode black line. We've got correlations with silver. and Huey. We've got inverse correlations with the US dollar index. All of these things give us additional information that we don't have in all the other markets. So that's important and that's precious. Okay, so have a look at this in a bit more detail for you. So you understand this, that we've had this inverse correlation going on and on and on. And then you can see there exactly where that inverse correlation has broken. And I can probably give you the exact day so you can look at it on your own chart and remember it. There we are, what are we looking at? There's the big bar, the big, super big breakout bar you can see there in gold, which was October 13th. That was up, and until then the inverse correlation had been working flawlessly. All of a sudden you had big up bar in gold matched by big up bar in US dollar index. So that was not so obvious on the day, but have a look what you've seen since then. The US dollar index has been essentially going sideways, whereas gold has been powering up and trading with bags of optimism about it. All right. So here are some other things about gold. Gold loves turning on the lunar cycles. It's hard for you to see the yellow on this particular chart. It just doesn't represent well, but you can see this recent high came right at a new moon. Now, the new moon and the full moon themselves don't actually mean anything. It's not about pretty pictures. It's not even, as Greg from Texas says, we've got to keep looking at the moon instead of our charts. It's just that those are lunar patterns. The reason you get a full moon is that the Earth and the moon and the sun are in a particular relationship. The inverse of that is the new moon. And at those points, the gravitational pull of the moon is shifted. It goes from strong to weak or weak to strong relative to where it was 24 hours earlier. And you know the power of lunar cycles. I've done a number of webinars. I've shown you how tides are the result of lunar cycles and how there's a very real effect on markets. And the two markets that are most affected by these cycles are the S&P and silver. So following silver, you've got gold. You can see the recent high came right at a full moon. In fact, I don't think Mickey D's with us today, but we usually get a laugh that he'll send me our Jim from Hull has joined us. Jim, as a new client, he's doing his Danielcode tutorial. It's the middle of the night over there in Hull. And I guess it's pretty wet over there today, Hull. I know Jim rather. I know the south coast of England's copping a real pasting with a massive, massive storm. Anyway, back to tell you, Mick and I would often have a little email saying, full moon tomorrow, full moon tomorrow. So gold is second, third, if you like, on the list. That is affecting these markets. It's pretty wonderful. You don't have to believe me. You can keep a chart like this. A's for apogees, P's for perigees. 1 and 3 are the quarter cycles. The buy signal at the lows here recently came exactly at the third quarter turn into the high on the full moon. Pretty cool stuff, isn't it? And it's happened before. It will happen again. The other thing is that gold loves turning at Danielcode time cycles. Most of you have seen this chart before. I show it continually, or at least often. And this chart is almost 3 years of data. It's 2 years and 7 months or 2 years and 8 months of data on gold. And what you can see is that every important turn has come at the expiration of a Danielcode time cycle. For this chart that I'm showing you, it's running on the 29-day time cycle. Why 29? Because 29.6 is Danielcode time. It's the first number that comes from our creation of the Danielcode ratios. Now, there are other terms that I haven't highlighted, but at the very least, what we can say is that every single term of any importance in this market for the last close enough to 3 years has come at a Danielcode time cycle. Why this issue of trading time is so vital, as I'll show you as we go on a bit further. So this is basically trading price, what you're looking at here. You can see target recognition at the blue lines, at the red lines, etc., etc. Danielcode target recognition in the market. I won't say that getting target recognition creates a turn signal. We put it the other way. Absent target recognition, you will not get a market turn. Now, that's about a 92% proposition. So you need to just be really aware of these Danielcode pressure points, if you like. They're actually time cycles put straight on the chart as price, which is pretty unusual. So you take these time cycles, which are normally vertical, and you simply say, I'm going to use the same ones, I'm going to put them on as price, where they're running horizontally and they're creating price levels which then require or seek target recognition. And that's where you get to with it all. So I think we've gone the wrong way here. We'll get moving again. And here we are. Danielcode tutorial. This will make you a super trader. Everything you see me do at these webinars, I will teach you in your tutorial. As I said, Jim, who's just joined us, is doing a tutorial at the moment. He was pretty impressed with the last session. And it's something out of this world. And I've got some quotes here from Greg Palladini, who's with us today. And as I've said, we're enormously grateful to Greg for his willingness to share his experience of his tutorial, and makes occasional comments from us since then. But it gives you certainty, confidence, and success in the biggest financial markets in the world. Can't say more than that, folks. And if you haven't done a Danielcode tutorial, you are seriously limiting yourself. Okay, so our present special offer, we usually rip one of these up for you every time we have a webinar. Normal fee for the Danielcode tutorial is $7,500, which has never changed since 2004. Obviously, I'm underpriced. Our special offer for today, I like to get people moving. First 3 people to apply for the Danielcode tutorial, I'll reduce your normal fee by $1,000. To take that offer, you must be able to start your tutorial before the 15th of this month. So email me now, jneedham@thedanielcode.com, to reserve your spot. All tutorials are one-on-one with me, and you set the pace. They'll go as fast as you like or as slow as you like. They go at different paces depending exactly how you want it run. As I say, if you're already a good trader, I'll make you better. If you're a complete novice and never seen a trading chart, I'll teach you everything worth knowing. In fact, the less you know or think you know about trading, the easier my job is, because we haven't got to get rid of all those bad habits like Elliott Wave and others. So creating and trading Danielcode time signals is the best trading system I know. It's the best trading system I've ever seen or heard of. And the only way you can learn about creating and trading Danielcode time signals is at the Danielcode tutorial. Little parts of it are on the website, but the basis of creating and the methodology of trading them is not. That's reserved for tutorial students, and I do hope you'll take advantage of this offer for your own benefit. Just running through correlations quickly, folks, keep it at the front of your mind. It's really important. Some markets are directionally correlated. Equities, Dow, S&P, NASDAQ, Russell, and Germany's DAX are so highly correlated directionally. A trade in any one can be executed in any other. In other words, if you like trading NASDAQ, that's fine. You can take a signal from the Dow, the S&P, or the Russell and trade it in NASDAQ. That's being done now. I know Greg Palladini does that. Remember, Forex with the same signal, they are directionally correlated. So if USD and GBP, if that's a buy and goes up, there's an extremely high probability that any pair with USD on one side will react the same. I'm saying that because I recently had a client who's trading dollar yen, dollar, loonie, cable, the whole lot of them, all without realizing they were correlated. And wondering why his results were limited. So if you're interested in this Danielcode trading tutorial, I will teach you everything worth knowing. Email me, or if you'd like to talk to me, you can Skype me on jneedham2. Remember, I'm in Australia, guys, so try and get those office hours right anyway, or just shoot me a line. A note is the simplest way. So I want you to be aware of actually how incredibly accurate and precise these markets are, and gold, frankly, is a standout. It understands the Danielcode better than almost anything. Look at this. Here's your black line. We've talked about that already. There's a black line on this chart at 2006.0. Look at that close on the inside bar, which was very, very clever on Monday. That close, 2005.6, 4 ticks below the black line. It wasn't going to violate the black line, and that's why you got a couple of down bars and a little inside bar today. So you had a really big down bar in the US dollar index today. So with the inverse correlation, we would have expected gold to go up, and it didn't. It gave a very muted inside bar. So that inverse correlation is not working, and it'll be a while, no doubt, before it reestablishes itself. But it's a wonderful clue to your trading. The same as this black line. If you understand how dynamic it is, you get a market that's charged up. It's tried to challenge that black line, and it's managed to put in the high bar, and the next day both closed below that black line. The high probability is it's going to correct. We don't know how long it's going to correct for, but we had a sell signal, and we're short and happy. Remember, folks, we talked about this previously. Goldman Sachs came out on Tuesday, I think, with a note saying that one of their proprietary long-term signals has been triggered, and markets are going up. You should get long. Happy days are here again. And you didn't need to know that because you actually got a CO3 buy signal the night before Goldman's announcement, as you can see on this T-bond chart. Now, US T-bonds have become an extremely important indicator of market sentiment. And I don't think anyone knows about it much except you do. And what's happening here is that there's an ongoing battle, and there has been an ongoing battle between the Fed and traders. And big traders are still bullish, have been bullish the whole time since the high. I don't think there's been one instance of any dramatic push down at when the market's been correcting. It's just literally been tiptoeing down. It's worse when we were at the lows last year. It had only corrected 50% exactly of its minor swing, the swing from the high down to the COVID flash crash low. 50%. That was it. And if you think that's enough of a correction for what we saw with the epic all-time bull market, good luck. I don't think it is. I think it needs much more correction than that, but we'll see. But right now, for now, Goldman came out on Tuesday, said, yeah, it's good. We're triggered a buy signal on one of our proprietary indicators. Get long, go for it. And the market said, wow, you beauty, straight into it. And you can see how excited the Russell got about those buy signals, which is a couple of days old. We had them, I guess, a day before Goldman, as we normally do. Let me just check that while I'm looking at it. Here we are. So, yeah. So we had a buy signal back on, well, it was actually created Friday night, and it was elected on Tuesday. And if you were not trading inside bars, it was elected on Wednesday. So here we are. Everything's good. Everything's hunky-dory, and that'll be fine until it isn't. So here's the next chart. This is soybean. I might have shown you this, showing you the black line that soybean faced today. Put its high in right at 1330, pull back a couple of ticks. That's normal behavior. Have a special look at how markets react around that black line. It's really, really interesting. So what this is all about is what you're looking at now. This is Nirvana. This is trading Danielcode time signals, creating and trading time signals. As we did with gold, as I always say, don't bet against the example. We had a massive, lovely straight run down in gold, no counter trend, $10,500 per one contract, and then the rally back up 15,000 per one contract. But when you get away from the example, it gets a bit hairier, doesn't it? We all know that. The example always looks good. Never bet against the example. This is the gold chart. This is Comex Gold on the December contract, and it starts sometime in June. I could have done this on the 057, would have got exactly the same. Here we are. 057, incidentally, is the continuous contract from Trade Navigator. Have a look at this and have a look at it closely. You have got every turn on this market, long and short. I don't think you've missed a single trade. If you have, that'd be all, maybe one. And you can see there that we've got at least two failures. There may be another one that I haven't spotted because this is a different chart that I put together early this morning. But those failures are something less, considerably less than the average true range. So add up the profits on this chart and allow the failures to be a percentage of the average true range. You pretty well need to own the gold mine to compare with those returns. It's that simple. This is the best trading system in the world, to my knowledge, and here's my challenge to you. A lot of this revolves around Mark L. As I say, he's with us today, and he was the first of the day traders that I was teaching time. I had been previously teaching price. I've been teaching that since about 2000, but it took me a long time to be confident enough to teach trading time because the overwhelming negativity from practitioners in this market. And it took a long time for me to say, I know this works. It works. I know it is what it is. I can prove it. And what the challenge is to you, I want you to paper trade natural gas futures for the whole of calendar 2016. Now, where did that come from? Mark L. Mark he's a wonderful character, very, very efficient man. He's been trying to retire and become a full-time trader for years and years, and he's so efficient. He keeps getting offered wonderful jobs, and he's had to keep accepting them. They're too good to turn down, but I know now he is in the process of trading his own account. So this stuff comes from him because that was the first time I'd actually said to one of the tutorial students who were trading time, I was teaching them to trade time. This was the first time I said, Mark was one of the very earliest, first guys I taught. And I said to him, now look, I want you to do some paper trading, and I'd like you to do quite a lot of paper trading. You pick the market, pick any market, futures market you like, and I'd like you to trade the whole of calendar 2016. This was some years ago. Mark picked natural gas for calendar 2016. Now, I didn't realize, I always knew he was a clever chap. I hadn't worked out quite how clever, but I can tell you that 2015 and 2017 were both excellent years, but 2016 is a knockout. And remember, the market giveth and the market taketh away. The super results you get in markets happen when markets are trending, and they don't trend all the time, but they do trend most of the time. and as part of your tutorial, I'll teach you methods to find out and be recognizing when markets are not trending. So anyway, Mark went ahead and he did his futures trading for the whole of 2016. I went through it with him very, very thoroughly. I found only 2 very small errors. And on his trading, this is now paper trading, it returned over about 32,000 from memory, and the margin on a natural gas at that time was 3,200. Now that, folks, is 1,000% on margin, or 500% on an average account of twice margin. Most brokers will like to see twice margin in your account. Go ahead and paper trade it. If you can't match those returns, you need Danielcode. Okay, and what's more, better still, take the Danielcode tutorial now, and if you do not match Mark L's returns within 10%, I'll give you your money back. I can't be more open than that. We know this thing works. It's been working for years and years and years, and we have a considerable number of clients who've learned it and said, this is marvelous, this is amazing, this is life-changing. But to you hearing this for the first time, or perhaps having heard it before, you just don't believe it, there's the challenge. Write down your rules first. We have to know what the rules are before we start. But you trade natural gas futures contract, NG2 or NG3, for the whole of calendar 2016. If you can't get within Mark's 10%, within 10% of Mark's returns, I will be happy to give you your money back. How's that for a deal? And hopefully Mark will be with us next week. I'll give you a call, send you an email, Mark. I would really love the opportunity of talking with you and sharing your experiences and your knowledge with our clients. Now remember, paper trading has limitations. We can't really duplicate real life conditions. But having said that, paper trading is still the best way to test your long-term strategies. Okay, if you haven't already, folks, please help yourself to a free trial. Go to www.thedanielcode.com. Start your free trial. Just hit the register button. Any issues, contact Terry at support@thedanielcode.com. If you previously had a free trial, the computer will remember you and it won't want to give you another one. But in that case, contact Terry and he will get you switched on manually. You should take this free trial, wander around the Danielcode website. There's so much to learn about trading futures and Forex. There's about 90 of my published articles on the website. There's well over 100 of these webinars, the video recordings of them on the website. Terry's organized them all by year. Go through them. It's all knowledge. It's something you may not have known. And it will make you better. This is our disclaimer statement, folks, and we're near the end of our session. It is really easy to lose money trading futures and Forex if you don't know what you're doing. And it's equally easy to make money, a lot of it, once you do know, once you're trained. And I do suggest to you, I ask you as strongly as possible, don't risk real money trading until you are confident that you know what you're doing. Better still, take the Danielcode tutorial, and when I'm confident that you know what you're doing, you'll be in a great place, I can assure you. So that's all for today, folks. Thank you so much for being with us. Thank you for Akshay and others. It's been great to have your company today. I'm going to do a special webinar next week. I know I usually do them every 2 weeks. I'm bumping that up because there's so much happening at the moment, isn't there? And a lot of people turned up today. Wonderful to have you with us. And a few that came in a bit late, Ben and Andre and others. But you got here anyway. If you've missed anything, folks, Joe, you're most welcome. Milton, very important to us, Milton, that you're here. If you've missed anything, folks, remember this is recorded, and we have Vicky with us. Wonderful to have you, Vicky. Okay, remember this is recorded. If you missed anything, Terry will have this recording posted sometime tomorrow. Until then, thank you for being with me. I hope you've enjoyed my challenge. I mean it. I'm serious about it. Do it. Can't make a better offer than that. There isn't a better offer. That's it. If it's not working, I'll give you your money back. Guarantee you I can teach you how to trade time. So bye-bye for now, folks. I'll look forward to seeing you at our next webinar. In the meantime, let me know, jneedham at thedanielcode.com. If there's anything in particular you'd like me to cover at these webinars, shoot me an email, give me some time to prepare, and I'll be happy to meet whatever you like. And that's it for today. So I bid you a good weekend. It's only Friday morning here, but I know you guys have got another full day to go. I've placed my order, so I'm off. I'm off for the day now. And that's the end of our session today. Bye-bye for now.